The trade truce isn't calming the volatile markets as much as some may have hoped. Joining me to talk about the volatile markets and going into 2019, what investors should know, is Carol Schleif, Deputy Chief Investment Officer at Abbott Downing. How are you, Carol?
I'm good. How are you?
I'm doing well.
Good.
So the news of the day already is the jobs number,
Right.
and it missed expectations. We had about 155,000 jobs,
Right.
added, but we were expecting around 198,000. What are you thinking about that?
We're thinking that markets and investors spend too much time trying to figure out, is good news good or is good news bad? And the fact that the year-over-year job or wage increases were pretty steady should reassure the markets. But I think pulling back from that and looking at it, you know, the volatility in the market, the news that's been out there with whether it's the Fed, jobs reports, trade, all those issues have been around for a long time. And people are just deciding to put them all together and put them in the glass as half empty standpoint right now. So it doesn't make sense for long-term investors really to hinge on every single economic report. They're just much too volatile in and of themselves.
So what reaction should investors have when something like the jobs report misses expectations?
I think that the reaction that investors should have is to have a good solid grip on what their long-term investment objectives are. Better yet, write them down, put them on the refrigerator, remind yourself of why you're in the markets in the first place, and then use those opportunities to look at places where maybe there's places around the globe where the valuations get pulled down and they shouldn't, because the underlying economy is still strong. The fact that wage growth was 3.1%, consumers are getting a little more in their pocketbooks, mall parking lots are busy, restaurants are busy, the consumer confidence remains high.
What's your advice to investors in a volatile market?
The advice, again, is to pay attention to your investment objectives, know where you want to be, stay diversified, stay in the markets, and lean into that volatility, because there's this misperception that volatility means risk, and in many cases it couldn't be farther from the truth, especially if you have a long-term opportunity. Stocks in particular are the only asset class we know where when a nice pre-Christmas sale comes on, people shun them.
The Fed is expecting, well, we're expecting from the Fed a December rate hike.
Right.
And I'm wondering how investors should react to that.
I think the market's already discounted a December rate hike, and it'll be like the last few. It'll be much more about what the Fed says in their announcement, in their press conference, and what the governors are saying in their individual speeches, because people have been watching that for hints in terms of what does 2019 bring. Because initially people were looking for 3 to 4 increases in 2019, and now people are backing off of that. So people will try to decide, is the Fed indicating that they may be done? And we saw what the Powell rally, what happened when the Fed indicated that it may be through raising rates.
The trade truce isn't calming markets as some have hoped.
Right.
And I'm wondering, with that said, what do you expect from China and the global economies?
We think that you're going to continue to see volatility. You know, the announcement of the detainment, if you will, of the CFO from Huawei didn't help calm fears. And we expect, even though functionally it's great that you've got a 3-month basic détente going on for that, and it does allow a lot of global businesses to reconsider their own supply chains and where they might want to shift them to. But I think officials in both governments are very, very intent on wanting to get some details, some deliverables, some things set. So, you know, what it does to emerging markets is it creates additional volatility, although it was interesting because in the overnight markets, even with the U.S. markets yesterday, emerging markets and developed markets, non-U.S. markets seem to hold up better because they've already discounted a lot of pessimism around trade.
How should investors look at the detainment of the CFO?
I'm not sure traders might want to look at it. Investors probably shouldn't be looking at it that closely because I think on a day-by-day basis there'll be all kinds of volleys and serves and things going back and forth on the issue, and they just, again, need to focus on long-term strategy and staying diversified around the globe.
Do you think that 2019 could be the year of the bear?
we're not calling for it, and actually we think underneath, when you look at earnings growth, while the growth rate is likely to slow, we're still likely to get an upper single-digit growth rate on the S&P 500 earnings next year, assuming that we can keep trade in on a pretty even keel. And with that said, given the pullback in valuations, you could be talking a mid-teens, a low double-digit to mid-teens kind of return on the S&P from these levels. And so from that perspective, being able to keep your wits about you, take a deep breath every time a new economic statistic comes out, and just stay focused on your goals.
There are some rumors going around that there could be a possible recession on the horizon. I'm wondering, for investors looking at those rumors, do you have any advice for them?
Stay diversified, keep quality in your portfolio as well, and don't chase credit risk. And to the extent that you're hiring managers and who are running active funds or picking stocks yourself, make sure that the balance sheets are in good shape on those companies, because companies that have solid balance sheets really benefit from economic pullbacks, because they're able to go do some acquisitions, they're able to strategically add, and you'll see really good, even cyclical companies, when you go into recessionary periods, are really able to stabilize their business quickly and come out the other side in a much stronger format.
Going into 2019, do you have any New Year's resolutions for investors?
New Year's resolutions. Write your investment objectives down and stay diversified and stay global.
Thank you so much for joining me, Carol. It's been so great to get your insight.
Thanks for having me.